Hey traders, we're looking at S&P 500 mini futures. The time frame is 2000 tick chart, which means every single candle represents 2000 transactions. The stock market is going to open in 1 minute, and as a price action trader, the structure is telling me that we have a clear trend range. I need to identify the support, important key level, resistance, important key level, and I'm following the channels on the chart because there is always channel being present and I want to follow the trend line rule correctly. Right now we have a short-term break, new extreme. The downtrend was quite significant, but I'm going to wait after market opens so I can do my analysis without the spike in volatility. So we're coming back and we can see that the market created the two-legged pullback break with the new extreme of the uptrend. Two-legged pullback indicating end of the bullish correction, and we have small resistance forming at the top with multiple confirmations. I call this multiple test. Not really a significant pattern, but you can simply see the important price level where all the sellers are coming to the market. We have a new low. First entry short, pullback, second entry short. This price level tells you that there is still bearish bias combined with the EMA rejection. But in order for me to sell a second entry short, I needed a little bit better bar. We actually triggered here a little bit lower, so you definitely cannot sell below this bull bar. Either way, unfortunately, there was no good opportunity for us to sell and no lower high to confirm it. Market just created the successful scalp down here. Alright, short-term uptrend has a break, new extreme. We're breaking back below the trend range. However, it was too stacked, too congested for me to sell. I'm looking for a lower high breakout pullback, but it looks like we're pushing already way too far down, and I want to see a lower high close to the exponential moving average. So it looks like we may not even get a chance to enter this. The price action finally freed itself out of this consolidation. This was just a slow sideways area on the chart. You can see the range rule still applied. You want to buy low, sell high, but eventually you can see a spike and a wider channel established. Finally, the EMA is pointing up and we have series of high highs and high lows. So at this point, the wider channel fits nicely at the bottom, and I'm looking for a high probability setup to go long. I cannot just buy any random setup on the chart. No, I need to see a high probability two-legged pullback at the key entry point. We have a second entry long two-legged pullback, but you can see the bar is inside bar alongside with the consolidation. We have many bars stacked right next to each other. We're at two key entry points, so chances are very high we're going to continue working higher. I like to enter this, but I can't because it is an inside bar and it is way too stacked, unfortunately, even though there's a big chance it's going to continue working higher because the price action finally corrected to the key entry point in the form of a two-legged pullback, new high, first entry long, pullback, second entry long. The second entry long worked for a scalp. We are breaking the channel, so trend line rule tells me that I expect for price action to create new extreme. So I'm not thinking about bearish reversal. I'm using the bullish channel to guide me through the structure. So I'm looking for a new high for this uptrend. That means the high that is higher than the latest highest high inside of this channel. Preferably the downtrend will play out, but I want to see push above EMA. That's a good signal for me that I can start buying again. Price action is correcting to our trend line, but we had overshoot, which means we expect stronger correction in the opposite direction. Also, there can easily be a wider channel like this because of the overshoot. So for this reason, I'm not going long here because we have overshoot and we can break the channel or potential reverse. So what I want to see, letting this downtrend clearly play out, then push above EMA and get a failed second entry short above the exponential moving average. Right, here, so I'm resuming the video as I'm going to take a failed second entry short. We have a new low first. I'm going to chase a little bit new low, first entry short pullback, second entry short failure. As we expected, the uptrend is new high, the downtrend played up with the break, new extreme. This is a decent bullish bar, we're closing above EMA, new low, first entry short pullback, second entry short failure. Let's see if we can get filled. I reacted quite quickly, but market never ticked back for me to get my limit. We still need to get new extreme for this bullish channel as we predicted. You can see overshoot just created stronger correction, and it looks like we missed the setup. That's a shame. This is the setup of the day. I have to cancel it because yeah, we already reached the scalp. So that's unfortunate because it's a textbook high probability setup. Why it is such a good setup? Well, because we were predicting a setup like this way before it formed. And generally when you're taking a high probability setup, you shouldn't get surprised. It shouldn't jump out of you out of nowhere. We predicted the wider channel. We predicted the overshoot break new extreme. And we wanted the failed second entry short above EMA. So everything aligns, context, key entry point, and the high probability setup, which is a bearish trap. So this is a great setup. I hope everyone watching took it. Me, unfortunately, I didn't get filled. Alright traders, I'm resuming the video as I entered a high-low confirmation setup of our previous fell second entry short. What happened, prices made the scalp, came back, tested the EMA again, and offered a great tier 1 strong bullish bar. And because context still dictates we need to get new extreme according to trendline rule, this is a high-low confirmation setup of the fell second entry short. It managed to close above exponential moving average, which is what I want to see. I'm scalping for 7 ticks because I used a stop order entry and my stop loss goes 1 tick below the signal bar. Okay, we are halfway in, but we need to keep pushing a couple ticks more. Actually, I'm going to go for 8 tick target profit. You can see very close to 1-to-1. High-low confirmation setup of the fell second entry short. Uptrend still needs new high. EMA is holding here and here again. This is a great tier 1 single bar, showed strong momentum. And even this secondary small channel needs to get new extreme. Okay, we are bouncing on my exit order, but we need to tick through. Okay, and we finally tick through. So what I'm going to do, I'm going to place my stop loss at break even because our main portion, the scalp 6 contracts, was just hit. Right now, we're going to keep the runner. I expect for prices to create new extreme, so I may not be too greedy. I might take it at the top once we reach the new high. Anyway, I'm going to keep it at break even because I don't want to give any money back. And this is just a bonus. So we will trail it and we will see if we can manage to get the new high. We created a new extreme for the uptrend according to trendline rules. Also, we just created the swing where I'm going to trail my stop loss. So in that way, I'm going to lock in 4 points. And in case we keep going higher, I'm going to be still holding the position and be moving my stop loss higher and higher. Depends if we get stopped out here or not. But because the overall structure was a trend range, there's a big chance that after break new high, we will correct a little bit stronger. For this reason, I'm tightening the runner this aggressively. Because uptrend played out with the break new extreme, I'm not really thinking about buying, but at the same time, the uptrend was quite long and strong from the very bottom of the trend range all the way up here. This is a significant uptrend. We may be thinking about fell second entry long, but it feels a little bit too early for me. I don't want to get trapped on still residual bullish momentum. Alright traders, I came back from a break and I saw we had a very nice double trap high probability setup. Now what happened after the uptrend played out with the break new extreme? Well, you can see our key level that we identify at the very beginning of the session is still coming to play and it's indicating signs of rejection. This is why it's so important to always mark the high of the day and low of the day important key levels at the beginning of your session so you're aware where the important price level is or you can expect some reaction. Now after there's a break new extreme, we entered a consolidation, which is typical according to market cycle. You expect after new high, correction or reversal. You can see flat EMA, the trend range was established. You follow still the trendline rule. There was a break new extreme. And right now notice we have a new high, first entry long, pullback, second entry long failure. So this right here is a reversal pattern. Triple top at the top of the trend range, push below EMA, and a failed second entry long. I would mark it more aggressive because you still traded up into this, so it's a little bit hard to sell right on the first failed second entry long. Later on, we had second entry short, but the uptrend is in play. Only after small break and new extreme, great double trap form, double rejection of the EMA, and a great tail 1 signal bar. Downtrend needs to get new extreme, and right now, as you can see, the bottom of the trend range is coming to play, and we'll see what happens. I only got one trade for the day with the runner, but as you can see, this is the overall market structure. You have to be very patient because the market started today with a slow consolidation. And as a price action trader, you want to make sure you got the context down right, the key entry point, and a high probability setup. And here the context is quite unclear. It is a pure consolidation, but eventually the market picked up and a nice bullish channel started. Now I want to talk about this setup because this is where you expect the new high for the first channel. Had there been a 1 tick lower here to form a second entry long and manage to close above EMA, this would have been a great high probability setup. But because it didn't trigger lower, this makes it more aggressive. Unfortunately, we already talked about the textbook high probability setups, expecting new extreme, and then a market cycle started. So I marked a few of these setups. We have a second entry short here that is also part of the failed second entry long. Then we had a 1 second entry short that you can see managed to work for over 3 points. And I decided to mark even this second entry short that ended up being a losing trade. I wasn't here, I was on my break. You can see the uptrend is in play. Only after a break and a new extreme it is okay to sell, but I cannot really blame anyone selling this. It's such a strong signal bar. It is right at the EMA, down Chinese new low, so it is okay to disregard the trend line here a little bit. If you took this trade right here, you don't have to be too frustrated. This one is a little bit tricky. Fortunately, you have a beautiful chance to re-enter, double rejection of the EMA, and down Chinese to get new extreme. So I hope you had a good trading day. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck with your trading.